But let me take it across to Nikunj, and he's got none other than Madhusudan Kela in conversation with him. Nikunj, take it away.
To talk about potential of Indian economy and Indian stock markets 20 years ago was more like an idea. It was a minority view. But today, there is a consensus agreement on the potential of India, the way forward, and Indian stock markets, why they deserve a pedestal positioning. Now, why am I bringing up this conversation, which I had with someone 20 years ago? Because the guest on my show today is someone 20 years ago told me that bet on India. And I coined this phrase after I met him, the man who saw tomorrow. So who is that man who saw tomorrow? Well, that's Madhusudan Kela, who is going to be talking about literally tomorrow, because tomorrow is the budget day. Yeah. So Madhu Kela, thank you for joining us. Always a pleasure, always a delight to have you.
Thank you, Nikunj. Always pleasure talking to you.
So what are we starting with, sir? Are we starting with the budget, or are we starting with markets?
It's always, you are the driver, whatever you want to start with.
Well, we've got you on that time of the show, that time of the year where budget is important.
Yeah.
Over the years, even though the importance of budget has got diluted, and surprise is that there is no surprise, but markets, they tend to use that as a benchmark to judge the future.
Sure.
What is your understanding of this year's budget?
So I would say, I would agree with you, Nikunj. Budget used to be a very big event, let's say 10 years back, when there were a lot of duty changes, a lot of policy changes, a lot of taxation changes. You know, there used to be a lot of tariff changes in the budget. But over the years now, specifically in this government, your policy changes around the year. So this is not a budget-specific exercise. So from a market perspective, obviously the importance of budget has diminished significantly. It is now lasting not more than 2 days of this kind of conversation. This year it is anyway vote on account, as they say. But I wouldn't be surprised if it is a full-fledged presentation of a proper budget, given that the government is confident of continuation in the next term, right? So, but do I expect any major surprises? I don't think so. Government has done a fabulous job, given the volatility in the global markets, of consolidating the fiscal situation. I think the target fiscal deficit of 5.9% should easily be met. If not, if we don't do better, there is a possibility that even we could do 5.8%. Government is in a very, very good situation. They have controlled the expenditure, revenues have gone up, the cash deposit of government with RBI is over 3 lakh crore rupees. So they are in a very good fiscal situation. There is no major surprises during the whole of last year, right? Now, because it is an election year, there is always that fear in market's mind that there could be populism in this budget. You know, given the track record of Modi ji over the last so many years now, I for one do not believe that they will go really out of the way to make it very, very populist. There will be some tweaking of some schemes here and there. But I don't think there will be a lot of tweaking. And frankly, Nikunj, we have come to a stage when market doesn't even care whether the deficit is 0.1, 0.2%, higher or lower. As long as the policy predictability is there and government wants to stick to the larger fiscal consolidation path, I don't think it's going to be a very major issue, even if they announce some larger populist measures. So all in all, very good. The quality of budget should be fabulous according to me, given that the capital expenditure CAGR for last 3 years has been very, very high.
30% actually.
30%. I would expect even next year capex to rise by 20% at least. This is the best thing which this government has done, that quality of expenditure, while the revenue expenditure is rising by 10-11%, capital expenditure is rising much higher, and that is what we need from the government.
Okay. So, budget is still about assumptions. Let's look at the maths just to understand
Sure.
that, what the directional call is.
Absolutely.
The fiscal deficit number for this year, there is no problem on that.
Absolutely.
For next year, do you see it moving closer towards 5? Looking at the realistic assumptions?
I would not say it will go to 5 because this year has been a very good from a government perspective, and again given their track record, I don't think they will make very aggressive assumptions. They have learned the trick that under promise, overperform. That is what really makes everything. I think it may be close to 5.2 to 5.4.
Which is fairly acceptable.
We're fairly acceptable. We're fairly acceptable, I would say, with a guidance that when July when they come back, and with the guidance that 2026 they are still sticking to that 4.5% number. So that, Nikunj, see, I want to tell you one thing, that after they come back, one thing which has not worked for the government is on the public sector, whether disinvestment, dividend target, that has not worked in last few years. Either they have not met those targets or they have not been possible. That is what could be a big surprise. When we get into the next year and year after number, because now you see with 50 lakh crore rupees of market capitalization of public sector companies and government ownership on a weighted average being more than 50-60% cumulative of all PSUs put together, which was merely 13 lakh crores. So the government wealth, which was maybe 6.5-7 lakh crores 3 years back, has gone to 25-30 lakh crore rupees. So there is a big delta which has come. Now you could give higher dividend, you could sell stake in stock in companies where your holding is more than 51%, or you could strategically divest. So that is one surprise I think will come once the new government is done, and that is what gives me personally the confidence that fiscal consolidation path is there to be adhered, and this is one weapon which the government has, which they can use any time, given how much buoyancy is there in public sector companies.
If the assumptions for tax collections, both direct and indirect, are in and around the nominal GDP, now we can argue 10 or 11 or 11 or 12. The only difference is it has to be in double digit. Is that a reasonable assumption on a higher base also?
Yeah, I think it's a reasonable assumption, and they will do. They will target to assume maybe 330 lakh crore rupees of GDP for next year. I think it's a reasonable assumption, and we are seeing that India, even in a troubled year, have actually outperformed anyone's prediction, including this year.
Yes. Even RBI has come out and increased the guidance.
Including the GDP prediction. I see no reason why, with policy stability and continuation of what we have been talking, I see no reason. And Nikunj, let's not forget what the world environment is ugly, right? Markets are very buoyant. You are talking of $34 trillion of US debt, which is equal to maybe 1.2, 1.3 times of GDP. So I think, India is the bright spot in the world. So there is no reason to believe why we can't assume 10-11% kind of a nominal GDP growth rate for next year.
Okay. A very interesting graphic which has come from your research team, and I just want to showcase it for the benefit of our viewers, is that let's look at the aggregate capex. 50% of the aggregate capex, well, that has moved into roads and railways. Railway capex, road capex is up 8x, railway capex is up 2.5x.
That's right.
Assuming that the capex number would be strong and it would be north of 10 lakh crore, that means road and railway will continue to get that booster shot.
Yeah, absolutely.
If that will continue, then can I say that for road and railway stocks, still there is a long way ahead?
I think I would not say for railway stocks. See, there is a difference between good news and stock price, right? Railway stocks have run really hard. That has been the best performing sector. So, can there be fireworks around the announcement of the FMSP? There could be fireworks, but I would be very careful in investing into railway stocks. I am not saying there is no let's take a view on this. If you are a 5-year, 10-year investor, there is still a lot of value in a lot of the PSU companies. But if you are looking at, let's say, next 1 to 3 years, given how much run-up has already happened in a lot of these names, I would be very, very careful in investing in some of these companies. When you come to infrastructure companies, when you come to EPC companies, which are building roads, which are building infrastructure, there still we see a lot of opportunities because A, there is significant under ownership. There is no signs of any euphoria there. Valuations are still very, very attractive. The order book position of all of these companies have swelled to a life high. Just to name, like Nagarjuna Construction today has the order book of more than 60,000 crore rupees. I don't mean to recommend this stock, but we are just speaking in the context. So there is a lot of opportunity in that basket we see, not necessarily with the railway company.
June 2020.
Yeah.
3 years ago, Madhusudan Kela was perhaps the only or the few amongst bulls who said that I'm going to buy PSUs. PSUs that time were considered to be more like an ugly duckling. Nobody wanted to buy PSU stocks. Today they are the darlings of the market. How much of the re-rating in PSU stocks is over?
So I would say, Nikunj, a lot of re-rating has happened. But, one thing is clear that they are the leaders of this bull market. PSU as a basket, as I gave you the number, it was 13 lakh crore rupees 3.5 years back. It is more than 50 lakh crore rupees in terms of market cap. Clearly no other sector where the market cap has quadrupled in last 3.5 years, right? So they are clearly the leaders. Was there a significant undervaluation when we were speaking at that time? There was. Today, that undervaluation is not there. It's a sector which is discovered. But why I am saying that I would still be very open to buy PSU stock if I get any either meaningful correction or a good idea. Like I am still very bullish on PSU banks. Select PSU bank, they are still trading at 5, 6, 7 PE multiple, 1-2 year earning forward, while the lot of other PSU stocks have gone to 30, 40, 50 PE multiple. Now this doesn't go in my head. That something is wrong. Either they have to go up or those stocks have to come down. So you will have specific opportunities within the PSU basket. I would not say that entire PSU is a buy or a sell. However, in select names, like we spoke about railways, I would be very, very careful. If you have to put money, you should do your homework very properly. And now, of course, if you are an investor, already an investor, you have to take a slightly longer term view. I don't think a lot of money in a lot of PSU names will be made over the next 1-2 years.
One looks at the numbers from HDFC
And
Bank.
again, let me give
Yes,
one surprise, Nikunj.
Yes, please.
Again, what could take the PSU market by surprise in terms of this PSU rally? Let's say the new government comes and they say that we are going to make 5 strategic disinvestment. It has not worked till now, but we are on the job. We have absolute majority, and if 5 or 10 companies get disinvestment, then it's a party time.
It's hard, but it could happen.
It can happen. But if you ask my hunch, I have no information, but my judgment says that it's more likely to happen than not likely to happen.
Because government has already said that they would like to be in businesses which are strategic in nature. They do not want to be in businesses. Government's business job is not to run businesses which are non-strategic.
Because what we know is only the price of PSU stocks. What market doesn't know is what is the intrinsic value.
Yes.
Like, do you know what is the kind of real estate holding with the State Bank of India will have? Or do I know what is the real estate holding of LIC will have? So there is a lot of intrinsic value in a lot of these companies. So we don't know. When your strategic disinvestment happens, at that time you look at the strategic value of the asset. So that is really joker in the pack. That if the government comes and shows that intent that they want to do, then there are still legs in the entire public sector companies.
If one looks at HDFC Bank numbers, the kind of commentary we are getting from ICICI Bank, everybody is feeling the pressure of deposits. The liability cost is hitting them. This is where do you think PSU banks would score, because they have such a fabulous branch network and old relationships. The deposit advantage will always be there.
Nikunj, my friend, this is what the market is showing, right? Last 3 years, all the stalwart private sector banks are struggling. The CAGR return is below 5% in most of the big names, barring one or two. Right? But if you look at bank performance of public sector banks, they were very cheap. And this is the case we have discussed many times. This is the case which we made, that, ownership is very, very high in a lot of private sector banks. Ownership is very, very low in public sector banks, and the valuation gap is very, very wide. And given that there is 85-90% coverage ratio, which has already happened, I see no real worry on the asset quality side. I think we are halfway through that, even though the PSU stocks have run very hard compared to private sector bank. I don't think the re-rating is fully done, and there is no sign of any euphoria here.
So can I say that the easy part of the bull market is over, but the hard part of the bull market will start, which could be volatility and it could be sideways
Honestly, Nikunj, there is never an easy part. Market making money, all 800 crore people in the globe.
But the way you invest, you make it sound so easy.
But when you have to buy, see, you have to have a lot of conviction. So I don't think it's ever easy. But having said this, if you are investing 3 years back, the chances of you going risk reward was disproportionately in your favor. Today you have to be very careful in what you are investing. We are still able to find ideas and make money. But obviously there is a greater risk, and the number of ideas which we are able to find are much fewer as compared with what we were able to find 3 years back.
A year ago we spoke about real estate.
Yes.
And the stocks have done rather well.
Yeah.
Do you still like them?
Selectively, yes. You see, again, now I am saying, I am not willing to make a commitment today to you that what will do well in the next 6-12 months.
Okay.
I don't know, honestly. So whatever I am buying or we are investing, we are taking a slightly longer term view. Think that we have to hold maybe for 3 years. Maybe the phase of the market. I today, as you were saying in your opening remark, everything looks so picture perfect.
Yes.
So as an investor, I have to be careful that what could go wrong. What can go right, everyone is talking about. But what could go wrong? That reason I don't know. Only after the market. And my base case is that not the markets will correct, but there is a possibility that it will correct. And the reason no one will knock my door and say that this is the reason market is going to correct. The reasons will not be known. But because we have made so much money in the last 3 years, and it is always, markets will always revert to the mean. They will always revert back to the mean average of return, how much money you can make. So some reason will come. Most likely it will be a global reason. But the point is, if there is a correction, and again let me repetitively say, I am not saying there will be a correction, but if there is a correction, people like me are fully prepared. Nikunj, over the last 3 years, what we have done, we have delinked our research from execution. Research is separate.
Great.
We have to be prepared with a price that if the price comes in this particular stock at this price, we will buy. So we don't execute when we do research. We execute when the price comes. So we have to be prepared. The long-term India story is fabulous. It is getting better. So if you ask,
that's the word coming in from Madhusudan Kela. India is a bright spot. It will be a party time for a lot of those PSUs if the government decides to divest stake in 5 to 6 companies, and lots of other key takeaways about how capex as well is going to rise substantially, nearly 20% in the next year. No major surprises though expected from the budget, and they have consolidated the fiscal situation quite well.